Hey everyone, thanks for checking into Stock Investing and Trading 101. Today we're going to be continuing with the Think or Swim tutorials, going into Fibonacci extensions and retracements, and also the golden ratio. One video that I'm very interested in doing in the future is discussing chart patterns and how they typically play out. As you see, I'm looking at the SPY ETF right here, and we have a very interesting chart pattern that is now forming on the daily here. It's going to be very interesting to see how this plays out in the coming month or two. But going back on topic, today we're going to be doing Fibonacci extensions and retracements. What these are is they are a set of lines created by taking two extreme points, usually a major high and a low. That's how these lines are created is from taking the beginning of the move to the end of the move is how I like to think about it. It doesn't necessarily have to be a low to a high. It can also be a high to a low. It just has to be from where the move started to where the move ended. This is what the Fibonacci extensions look like. So what these are is a tool that can be used to help establish profit targets or estimate how far a price may travel after a pullback or a retracement. These can also be support and resistance lines. So pretty much these lines represent places on the chart that may have a big impact on price movement. And they can be very useful. They can be used in any time frame. And these lines are actually calculated from a Fibonacci ratio, which is made from a very smart man named Leonardo Fibonacci, and it actually uses the golden ratio, which is used in really essentially it describes proportion of everything from atoms to huge stars in the sky. This is a very useful ratio. This isn't only for stock charts. Essentially, the golden ratio is this 61.8 line right here. This specifically, this middle line of the 61.8, I'm going to make it a different color if possible. But yes, this is the golden Fibonacci line right there in the middle. This is the golden Fibonacci line. This is, it tends to have the most price action near these levels. And my high could possibly be drawn a little bit better to make these lines as accurate as possible, but I have a recording thing in the way. But make sure you always want to get pretty much the exact bottom or the exact beginning of the move and the exact end of the move to be technical. So yeah, these lines are just essentially very important support resistance lines, and during a pullback, like the SPY is starting to pull back here, this line may be a support for it if it reaches this low, and this line, like I said, is the golden ratio. This is the Fibonacci main line, I guess, and this line tends to be very important. So typically I have these drawn. This is a very good technical indicator on all of my charts. This is the 1 year, 1 day chart, and when going into the minute chart or some of these other charts, you'll be able to see exactly where the Fibonacci lines are on the chart, and these can, as you see, this may have acted as a support here, this line, and along with these trend lines, which are now broken, which I talked about in my other tutorials, is trend line breaks and drawing these trend lines. So this line may act as a support level. It may not. It may break through this line, but I like to have them on my chart. And the thing about it is you can have it on every time frame chart because each different time frame may have a different high and a low, but it's got to be a clear high and a clear low. This is an example of one you could draw Fibonacci extensions on. So this has a defined low right here. Right, there's no lower anything on this chart, and a clear high. So you could also draw Fibonacci extensions from this level at the low all the way up to the high, and this would give you another set of Fibonacci extension lines that are, these are actually more shorter term so to speak, lines. So these lines are fresher Fibonacci lines, and as you see, now we have two sets of Fibonacci's on my 1 minute chart. And you can also adjust the Fibonacci's if it makes more sense to move it a little bit, where if it lined up, a little bit better down here, just a little bit better, it may be wise to just move it to make it a little more accurate. But I tend to just keep it, at the highs and the lows. But I wanted to definitely show you guys that it can be used on more than just one time frame. Every time frame where there's a clear high and a low point, you should and you can draw Fibonacci extensions and retracements on any chart like that. And yeah, so it's definitely very important. You could also draw them here to the low, but this would be an old Fibonacci line that is now that we have a new high, uh, that would be an outdated Fibonacci line. So I would always just draw the newest trend. This is the newest price move that the SPY had, was the low to the high. And yeah, so moving on, we're going to do Fibonacci extensions. I'm sorry, Fibonacci retracements. These are a very similar tool to the extensions, but a little bit different. To get in there, you click on drawings and go into the tools once again, which I showed in another video, and you go down to this percent sign. This is the Fibonacci retracements. And this is pretty similar. It works on the same way, the beginning of the move to the end of the move, and it can measure the pullback with a trend. That's the main difference, is that this can help measure the pullback within a trend. So on this uptrend we have, this can help you see where any pullbacks may go. And so I took the extensions off right there, and we're going to add some Fibonacci retracements. And that's all that is, the beginning of the move to the end of the move. And these lines could be essential support and resistance points or pullback points within this large move that we have here. So once again, these lines aren't to be traded by themselves. Just because it's at the golden ratio doesn't necessarily mean you should be acting on that. It's just another tool to use in addition to all these other tools that I have taught so far. So far I've had a video on support and resistance, drawing trend lines, another video on using technical indicators such as you see here, the RSI, the MACD, the Bollinger Bands, the VWAP, etc. And I also have a beginner's intro to Thinkorswim video showing you guys the basics of Thinkorswim. So I hope this video helped some of you guys. Essentially, these are just a set of calculations going off of the golden ratio and the Fibonacci ratios that are drawn from a extreme high or a low point to the next. It's essentially, how I like to think about it, is the beginning of the move to the end of the move. It makes it a lot easier than talking about highs and lows, because lots of people can be confused that it doesn't necessarily have to be from a low to a high. It can be vice versa as well. So I hope you guys liked the video, learned something out of it. I like to have these on quite a bit of my charts. I'll put another one up on different charts. So as you see, I already have one on ACB here. This is from the low point to the high point up here. And so yeah, you have these lines. This is the golden fib line, remember, the 61.8. And as you see, this actually acted as a great resistance point for, I mean, this line got tested at least, 4 or so times, where it ultimately ended up being a resistance point. And it's actually pretty amazing how often these lines, especially the golden fib line, can play a factor in a stock prices in its movement, really, because there's so many times I keep these Fibonacci points up pretty often. Of course, they're a good technical indicator, and it's really amazing how often these points can be an effect of your trading. So here's another example. This is actually a chart of GM going from a high to a low point. So it's a bit different how, again, the golden ratio right here. 1 second, let me get this off. But the golden ratio, the 61.8, acted as a clear resistance point at right here, as you see. So these points are very crucial, and I would have them on every chart that has a clear, certain charts. This chart, you couldn't really have you could try, I mean, you could try to put it from there to there, but it'd kind of be pointless because I don't think much price action would uh, react to those lines. Typically, especially on like a chart like this, where it's a 1 year chart, where there's a defined clear high and a low, uh, everyone and most traders are going to be having these lines. So the chance for a stock price to react to these lines becomes much, much greater, obviously, when more people are looking at these lines. So, uh, the Fibonacci's from a 1 year chart are going to be very, very when the price reaches those points, there's going to be reaction. If it's coming from a 1 minute chart, a fresh Fibonacci set, it might not react as well to other lines. And even as you see here, this is from today's live data. These lines today are reacting to old Fibonacci lines. So, this is just another example of how these lines can help in your trading. I mean, this is an old Fibonacci line that probably has been on my chart for, weeks or months, and it played a role in my trades today. So, hope you guys liked the video. Once again, please subscribe to my channel. Check out my other tutorial videos. If you have anything specific you'd like me to cover a video about regarding thinkorswim or stock trading, feel free to comment on that, and I will make a video assessing those questions. So, thanks for checking in, guys. Check out my other videos, and have a good one.